If you were born before 1961, the deposit landing in your account in 2026 is almost certainly smaller than the one you are actually owed. I know how that sounds. I didn't believe it either. Not until the afternoon I sat at my own kitchen table in Peterborough, 2 years of statements fanned out under the lamp, and finally saw the gap with my own eyes. The government had been quietly paying me less than the rules allowed. Nobody lied to me. Nobody sent a letter. The money simply never showed up, and I never thought to ask. By the time I finished digging, I had found a number that still makes my stomach turn. Stay with me, because there is a specific clause buried in the old age security rules, one most people collecting right now have never heard a word about, and once you know it, you can act on it from your kitchen table this week. And yes, this is for people already retired and already collecting, especially you. Let me tell you how I found out, because it started with something small. I had always assumed the right amount just arrived. You work, you pay in for 40 years, you hit 65, and the machine that took your money for decades finally starts giving some back. That was my whole understanding of it. I trusted that the people who knew the rules would apply the rules. So when my monthly payments came in, I glanced at the total, saw money, and got on with my day. That was my first mistake, and it's the most common one there is. What changed everything was a conversation at a curling club, of all places. A fellow a few years older than me mentioned, almost in passing, that he was getting something called the guaranteed income supplement on top of his old age security. I nodded like I knew what he meant. I had no idea. I went home, looked it up, and learned that the guaranteed income supplement is a monthly tax-free payment for lower income seniors added on top of the regular old age security pension. It was created back in 1967, almost 60 years ago, and it has quietly existed every single year since. But here is the part that stopped me cold. It does not arrive automatically just because you qualify. For years, you had to apply for it yourself, and if you never filed the right form, the money simply sat there unpaid while you went without. So I asked myself the obvious question: how would I ever know if I qualified? And the answer is what started to make me angry, though I'm getting ahead of myself. The amount you can receive is based on your income, and the income thresholds are higher than most people assume. A single senior can have several $1,000s of yearly income and still receive a meaningful supplement. A couple can have even more. I had assumed it was only for people with nothing at all. That assumption cost me, because the first piece of the number I'd eventually uncover started right there, a monthly figure I'd been leaving on the table, and at that point all I knew was the first digit of it. But the supplement was only the beginning, because there's a trap inside the way they calculate your income, and it works against you in the exact year you can least afford it. Here's the mechanism. The supplement for any given year is normally based on your income from the year before. Sounds reasonable until you picture the moment you actually retire. The year before you retired, you were still working, still earning a full paycheck, so your income looks high, which means when you first apply, the system can look at last year's working income and decide you don't qualify, or that you qualify for almost nothing even though you just stopped working and your real income has collapsed. Therefore, the very year your income drops off a cliff is the year the formula pretends you're still flush. I didn't know there was a way around it. Service Canada has a provision where if your income has gone down because you retired or because employment or pension income stopped, you can ask them to base your supplement on an estimate of your current year's income instead of last year's. You report the income you actually expect now, not the income from when you were still punching the clock. That single request can flip you from you don't qualify to a real monthly check. Nobody at any counter ever volunteered that to me. I found it buried in the program details, written in language designed to be skimmed past. And that's when the number I'd been circling got bigger, because once I understood the supplement, I had to look at the bigger pension underneath it and at a second rule that had been shaving money off the top without me feeling a thing. Everything I've just walked you through, the supplement thresholds, the income estimate request, the timing traps, and the rules most people never hear at any government counter, I spent months pulling all of it together into one place so you wouldn't have to do what I did. I wrote it up in a book called The Senior Money Blueprint, and it's part of a complete set I put together called the Complete Canadian Retirement Field Edition, built specifically for Canadians already retired and already collecting. It's available for $97, and you'll find the link in the description below. If you'd rather have it in your hands tonight than wait for the next statement to arrive with the wrong number on it, that's where to go. Everything in the rest of this video is in there, laid out step by step with the forms and the questions already written out for you. This next one matters even if your income is too high for the supplement, so don't tune out. It's about the old age security pension itself, and a feature most people activate by accident. You can choose when to start your old age security. The standard age is 65, but for every month you delay it past 65, your monthly pension grows by 0.6%. Hold it all the way to 70, and that's a permanent increase of 36% for the rest of your life. No investment risk, no market, no catch. 36% more every month until the day you die. Now, here's why that's a double-edged thing, and why timing is everything for people born before 1961. If you start too early without understanding the offset, or too late without understanding another rule I'm about to get to, you can leave a fortune on the table in either direction. I want you to hear the real figures. In 2025, the maximum monthly old age security for someone between 65 and 74 sits north of $700 a month, and over 12 months, that's more than $8,600 a year from this one program alone. 36% on top of a number like that is not pocket change. It's thousands of dollars a year you either capture or forfeit based on a decision most people make without anyone explaining the trade-off. But, and this is the hinge, delaying isn't automatically right for everyone. And here's the part that genuinely surprised me. If you qualify for that tax-free supplement I told you about, delaying your old age security can actually work against you because you can't receive the supplement until your old age security has started. So the delay to 70 advice that financial folks repeat on television can be flat wrong for a lower income senior who'd be better off starting now and collecting the supplement immediately. The right answer depends entirely on your own income, and nobody runs that math for you unless you make them. That gap between the generic advice and your actual situation, that's the second place my missing number was hiding. Therefore, I had to keep pulling the thread, because there was a third rule. And this one is the one that quietly punishes the people who did everything right and saved a little extra. It has a polite, bureaucratic name, and for the first part of my journey, I didn't even realize it was happening to me. Now we get to the recovery tax. Most people call it the clawback, and here is exactly how it works in plain numbers. Once your net income for the year climbs above a certain threshold in the 2024 tax year, that line sat around $90,997, the government begins taking back your old age security at a rate of 15 cents for every dollar you earn above that line. 15 cents on the dollar, climb high enough, and your entire old age security pension can be recovered, every last cent of it, until you're effectively getting nothing while still technically being enrolled. Picture what that means for someone who saved responsibly. You did the right thing. You built a retirement nest egg. You have a workplace pension, maybe some investments, and a registered retirement fund you're now drawing from. And the reward for that discipline is that the income from your own savings can push you over that line and trigger the system to take back the pension you paid into your whole life. I felt the sting of this personally the year I converted my savings and my income jumped. My old age security shrank, and I couldn't figure out why. The answer was the recovery tax working silently in the background, and the number I was chasing grew again because the money it pulled back was money I never saw listed as lost. It just never arrived. But here's what almost nobody tells you about that clawback, and it's the thing that turns this from bad news into something you can actually fight. The threshold is based on your net income, and net income is a number you have real legal levers to lower. Pension income splitting with your spouse can move income off your return and under the line. Drawing from a tax-free savings account instead of a registered fund doesn't count toward that net income at all. Timing the withdrawals from your registered retirement fund, contributing to a spousal plan in the right years, even the order in which you draw down different accounts, all of it changes whether you cross that line or stay safely under it. The clawback isn't a wall you smash into helplessly. It's a line you can plan around if someone shows you it exists before the tax year closes. Most people only learn about it after when the money is already gone and the year can't be redone. And that brings me to the part of this I most need you to hear, because up until now you might be thinking this is all very nice for someone who hasn't retired yet, someone who still has time to arrange things. Maybe you're sitting there already collecting, already past 65, already locked into your choices, thinking the door closed behind you years ago. I thought that too. I was wrong, and this next part is built specifically for you, the person who assumes it's too late, because it is not too late, and here's the first reason why. That tax-free supplement, the one most people never claim when you finally apply and you qualify, Service Canada can pay it retroactively. They can go back up to 11 months from the date you apply. So if you've been eligible and simply never filed, applying now doesn't just start the money flowing forward. It can trigger a lump sum reaching back nearly a year. I want you to sit with that. There are people watching me right now who could file one form this month and receive a retroactive payment plus a new monthly amount on top of their pension going forward for income they were entitled to and never collected. That's not a loophole. That's the program working the way it was always supposed to, except the working only starts when you push the button and nobody tells you the button exists. The second reason it's not too late goes back to that income estimate I mentioned. If your income dropped this year, maybe you stopped some part-time work, maybe a spouse passed, maybe a pension changed. You don't have to wait until next year's tax assessment catches up. You can ask Service Canada to reassess your supplement based on your current lower income right now. That can mean a higher payment starting almost immediately instead of waiting 12 to 18 months for the paperwork cycle to recognize a change you're already living through. Already retired, already collecting, and you can still move the number this month. That's the whole point. And the third reason, the one that finally takes me to the figure I've been circling this entire time, the number the system never once showed me is a provision so obscure that even people who work near these programs often don't think to mention it. It changed everything for a couple I know, and it could be worth more than anything else I've told you tonight. Let me set it up properly, because you deserve the full story of how I found it. After I'd sorted out my own supplement and my own clawback, I started helping a neighbor with hers. Her husband's health had failed, and he'd moved into long-term care. She stayed in their home. Two people who'd been married more than 40 years, now living at separate addresses, not by choice, but because one of them needed full-time care. On paper, the government still treated them as a couple for the purpose of calculating that tax-free supplement. And a couple's combined income gets measured against the couple's threshold, which meant her supplement was being calculated as though she still had her husband's income and presence in the household, even though she was now running that house and her life alone. Here is the clause. Under the old age security rules, there is a provision for what's called involuntary separation. When two spouses or common law partners are forced to live apart for reasons beyond their control, most commonly when one enters a care facility, each of them can ask to have their guaranteed income supplement calculated as though they were a single person based only on their own individual income rather than the combined couple's income. Because separating their incomes drops each person below the line that matters, the supplement can jump substantially for one or both of them. For my neighbor, being assessed on her income alone instead of the couple's combined figure changed her monthly payment dramatically, and once we worked the retroactive piece, the difference stretched back through the months she'd already spent paying the household bills by herself. When I finally totaled up what these rules had cost me across my own years of not knowing the supplement I never claimed in the early years, the months my old age security was quietly recovered before I learned to plan my income, the timing I got wrong because no one laid out the trade-offs. The number landed at just over $11,000. $11,000 gone, not stolen in any dramatic way, just never claimed, never planned for, never shown to me on any statement. That's the number the system never showed me. Not because it was hidden in a vault, but because the entire structure assumes you already know to ask and quietly keeps what you don't claim. $11,000 is a roof repair. It's a year of a grandchild's help. It's the cushion that lets you sleep at night, and it sat unclaimed because the rules were written to be applied only when requested. Now think about the involuntary separation clause specifically, because it's the sharpest example of everything I've been telling you. It is real. It is written into how these programs operate. It applies to couples right now where one spouse is in a nursing home or long-term care while the other remains at home, and the request to be assessed as separated for benefit purposes, it does not happen on its own. A family can go years with one spouse in care, the other at home struggling, both still classified as a couple for the supplement, both receiving less than they're entitled to, simply because Nobody at the care home, nobody at the bank, nobody anywhere told them this provision exists. If that is your family, if you have a spouse in care, or someone who does that single request could be worth thousands of dollars a year, plus a retroactive amount reaching back up to those same 11 months. So let me put the whole map in your hands plainly, the way I wish someone had handed it to me before I lost a cent. First, find out whether you qualify for the guaranteed income supplement, and don't assume your income is too high. The thresholds are more generous than people think, and it's tax-free money on top of your pension. Second, if your income dropped because you retired or because something changed this year, ask Service Canada to base your supplement on your current income, not last year's, so you're not punished for the year your paycheck stopped. Third, understand the recovery tax line, that net income threshold sitting around $91,000, and use every legal lever you have: pension splitting, tax-free account withdrawals, the timing of your registered fund, to stay under it and keep your full pension. Fourth, if you're a lower income senior, get real advice before you delay your old age security to 70, because delaying can lock you out of the supplement and cost you more than the delay earns. And fifth, the big one, if you or a spouse is in long-term care while the other lives at home, request the involuntary separation assessment, because being counted as two individuals instead of one couple can lift the supplement for both of you and pay back retroactively. Every single one of these is something you can start from your kitchen table. A phone call to Service Canada, a form, a question you finally know to ask. None of it requires restarting your retirement, hiring anyone expensive, or understanding markets. It requires only one thing: knowing the rule exists before the year closes and the money becomes unrecoverable. Because that's the quiet trick of all of it. Almost everything I've described can reach back about 11 months, but not 11 years. The supplement you didn't claim a decade ago is gone. The clawback from 3 tax years past is mostly gone. The window to recover is narrow, which is exactly why I couldn't let you go one more season without hearing this. I keep coming back to that afternoon at my kitchen table in Peterborough. The lamp on the statements spread out, the slow, sick realization that the right number had never simply arrived, that I'd spent years assuming the system was looking out for me when the system was only ever going to give me exactly what I asked for and not $1 more. That feeling is the thing I most want to spare you. You worked too long and paid in too much to let it drain away quietly while you wait for a letter that is never coming. You are the kind of person who refuses to be quietly shortchanged. I know that, because you just sat through all of this instead of clicking away, which means you already feel in your gut that you've probably left money on the table, and now you have the names, the rules, and the forms to go get it back. So make the call this week. Don't wait for the new year. Don't wait for the next statement. The 11-month window is ticking the whole time. And do me one favor right now, because I read every comment and I want to know. Tell me this: did you know the guaranteed income supplement existed before tonight? And did you know it doesn't pay you automatically? Just answer those 2 things in the comments below, yes or no, because the answer tells me how many of you have been quietly missing it, and it might push someone else scrolling past to go check their own. Type it out. It matters more than you think. If you've been around people your whole life who got let down by fine print they were never shown, then you belong with the rest of us here, Canadian retirees who have decided we will not be the quiet ones who just take whatever shows up and never ask why it's less than it should be. That's who we are in this corner of the internet. Stay with me, because the next thing I'm pulling apart is the one timing decision on your registered retirement fund that can trigger that clawback by accident in a single bad December and exactly which month to make the withdrawal. So it never does. Share this one with your family first. Then come find me for that, because the number they never show you is always there. The only question is whether you're the one who finally asks to see it. Let me leave you with one more thing, because it's the piece that ties this whole night together, and I don't want you walking away without it. Every rule I've handed you tonight shares one quiet feature they all run on silence: the supplement that doesn't pay itself, the income estimate you have to request, the recovery tax that works in the background until you learn to plan around it, the separation clause nobody mentions at the care home door. None of them are secrets locked in a vault. They're written down, public, sitting in the program, rules where anyone can read them. The only thing protecting that money from you is the assumption that you'll never think to look. That's the whole machine. It counts on your trust, your politeness, your belief that a system this big surely wouldn't let you go without. I believed that for years. I sat at that kitchen table and I believed it right up until the statements told me otherwise. And the hardest part wasn't the $11,000. It was knowing that one phone call, one form, one question asked at the right moment would have changed all of it. That's the regret I'm trying to hand you away around tonight. So here is what I want you to do before you close this. Pick up a pen, write down 3 words: supplement, separation, threshold. Tape that note to your fridge. When you call Service Canada this week, those 3 words are your map, and they cover almost everything that quietly cost me. Ask whether you qualify for the supplement. Ask about involuntary separation if a spouse is in care. Ask where your income sits against the recovery threshold. 3 questions. 1 phone call. A few minutes of being slightly less polite than usual because the money was always yours. You earned it across a lifetime of showing up. The rules just waited patiently for you to be the one who finally asked, be that person today.